What's up everybody? This is going to just be a quick update on whether or not the bottom is in already, because in the last couple of videos we talked a lot about how there are many points of confluence and indicators and just data points that indicate that these prices at the moment where Bitcoin is at are historical buying prices. Now that we have filled those levels, it is now time to figure out if this is indeed the macro bottom and if it will just keep going up from here. And the quick answer is going to be no, we are not going to just keep going up from here. So if you want to hear the rest of the analysis, make sure you stick around to the end of this video. Now, diving straight onto the daily chart, you can see that on the mean reversion channel, we have went really deep into a retracement on the MRC. And this is a really good sign because there has been only one other instance where we have went that deep onto the mean reversion channel, and that was back in March of 2020 as well as October of 2018. And I know some of you might say, hey, that's two instances, right? That's two instances. Cool. Either way, in both instances, right, when you go this deep into a retracement into the MRC, it indicates that that is either the bear market bottom or this is like a super, quote unquote oversold. I don't like to use that word, but you get the point. Either way, it is an indicator of, a very macro bottom, and it indicates that these are historical buying prices. Now, just to be sure that that is indeed the bottom, let's take a look. Now, in the second instance, you can see that we fell 24% below the mean bottom band of the mean reversion channel before, we had a really big rebound. At the moment, we touched exactly, the bottom band. So in the instance that we do fall below the bottom band, if we expect it to drop another 24%, that is going to put us at about 13.4k. And if we drop 33%, that's going to be right at about 12k. And those of you who watched my last video, you would have understood that I talked about these two levels right here at 10k and 9k, where if prices hit both of these levels, these are going to be like historic, like bottom levels, right? Bottom level. So that's the first thing that we have to understand, right? Even though this might not be the exact bottom, it does not change the fact that the odds of you being profitable and getting a really good reward out of these buying prices at the moment is way higher than if you were to be shorting here. Now, am I saying that do not short this at all? That's not what I'm saying. In fact, I'm going to get into the levels where I might look for a short later, but that is only based on intraday and short-term trading. In the midterm and in the long term, these are prices that I'm buying at, right? This is where I'm buying spot. And if I do short, then that's going to just be an intraday movement to capture a small move, a small pullback in the the bigger picture, or maybe it could be a really big pullback as well. Either way, we're going to hop in to a lower time frame to figure that out. Now that we are at a lower time frame, we have to figure out if this is indeed the bottom, and the lower time frame is going to tell us that answer. Now, before I get into anything else, I'm going to just draw a fib from this swing high right here to that swing low right there. And the reason I do this is because we need to understand what are the key fib levels before we can dive into any kind of analysis. And I suggest all of you guys do the same with your ranges. Now, before we dive into anything else, in the last video, as well as in my private Discord group, I mentioned that these are the areas where I'm going to be buying spot at. And in that, just the last video, I mentioned that 17,500 would have been a perfect level to buy spot at. And if there is anyone who caught 17,500, I need you to comment down in the comment section below 17k, because you guys will be in some massive profits at the moment. And it would be amazing to hear if I've actually helped any of you guys make money. But either way, now that we have drawn the fib, let's get into a lower time frame. So the reason why I drew the fib in the first place is to identify which is the area of equilibrium. And you can basically just define that as the 0.5 fib, because anytime the price goes quote unquote oversold or incredibly overbought, the algorithms tend to want to bring price back into equilibrium. So in this case, equilibrium is going to be above where price currently is at, and that is going to be sitting at around 25 grand. So in this relief rally, if prices keep going up, then 25 grand is going to be the first major level of resistance that we're going to see in terms of, within this range. But I'm going to go one step further, and I'm going to say that instead of drawing a fib from there to there, you can think of the price as moving downwards from this swing high right there to that swing low. I would say this swing, this fib, is the one that completes the move, which means that assuming this is the bottom right here, The 0.5 is sitting at about 28k, and you can see this is where all the price actions happen above the 0.5. So I would say that the first major level that the price could shoot for is at about 28 grand. Now, are we going to hit 28 grand, right immediately? And the answer to that can be found in the Bitcoin CME Futures chart. And right here, you can see that there is a really, really big gap over here between 27,300 and about 28,800. Now, why do I bring up a CME Futures gap? Because the last time we had a CME Futures gap, this is where I taught you guys to buy. Right there, see that CME Futures gap right there? This is where I taught you guys to buy. Back in that video, look what happened immediately after that level. Bam. At the moment, there is only 2 CME Futures gaps between, where price is at the moment. And if we assume that the relief rally is going to be beginning in this week up to 3 weeks. Now, again, I don't think that the macro bottom is necessarily in, but what I do understand is that I want you to think of it this way, right? We have not gotten a interest rate hike by the Fed on this scale in 30 or like 50 years or something, right? So this current times, fear is at an all-time high level, right? It is at close to unprecedented levels. Then you have to think about, historically speaking, where have been the best buying opportunities? Where have they presented themselves? And the answer to that question is when fear is at really high levels. So when you pair this equation up, then you could pretty easily imagine, with the kind of panic that you've been seeing in the markets over the last 2-3 weeks, then it is very easy to assume that you might have some kind of a relief rally back to 28, 29k before ultimately moving down again. And that does not really defeat the higher time frame narrative, because at the moment, if you take a look at the daily chart, you are still bearish until otherwise proven, because you've consistently formed lower highs and lower lows. And even if you were to retrace all the way back here, you can see that you have not really broken structure on a higher time frame other than this high right here, which we're not going to count. So imagine this way, right? Price comes in and fills the CME gap before going downwards. So essentially, you can think of it as before you break about 32 grand-ish, which is this swing high right here, you are not really bullish on the daily chart or any kind of higher time frame macro chart. So when you assume it that way, it can be easy to see where, why this would make sense. So to the people who are buying spot, yes, these are really good prices. In fact, I believe it's incredible prices to be buying spot, because if you extrapolate this to like a 2, 5, 10 year time frame, this is going to be you're going to get like 10, 20, 50x out of these current prices. But for the people who are trying to build a leveraged swing position, as long as you scale in, these are still good prices to be buying in. Just expect further downside before you find the eventual bottom. And just remember that we're not trying to catch the exact bottom here. You don't need to catch the exact bottom in order to make really good money when it comes to investing. And that is the moral of the story, right? Just scale in, DCA, and you'll be fine. To the traders out there, let's talk about some levels where I might be looking for a short. And that level is going to present itself at 21,500 to 21,600-ish, because if you take a look at the 4-hourly time frame, you can see that there is a fair value gap where essentially there is zero price action happening between this level. Not only that, but you have 2 relatively equal highs over here, which price is going to shoot for, right? Because every time when you see market structure on the lowest time frame shift, for example, over here, you have started to form high highs and high lows. Whenever this happens, you have to immediately start looking for the level that these market makers are looking to take out. Example, this right here is a swing high right here. And notice how the moment you take out that level, immediately you get a retrace, right? This is liquidity, right? There's liquidity here. There is also, similarly, there is liquidity, a lot of liquidity in this fair value gap. Essentially, think of it as an institutional area of value. If you follow my school of thought at all, or if you've watched any of my videos before, you understand that the best trades that you will ever take is the trades that you take in accordance to the institutional direction. Because then you have the power of the institutions behind you instead of against you. So if I was looking for a short, I would look for it at about 21,500 to about 21,600. Now, instead of setting a limit directly at that level, which is what I'm not going to do, I would just set an alert. And the way you do that is, literally just go on TradingView, add alert, and once price hits this level, you will be alerted. Makes sense. Now, if you want $30 off your TradingView subscription, check out the link in the description box below. But otherwise, the reason I don't recommend setting a limit just right there is because prices are really volatile at the moment. And I'm sure many of you can attest, when price is really volatile, you tend to get stopped out prematurely before price moves in your direction. For example, if you went long at any point during this down move, look at how aggressive this down move was. If you, let's say you set a limit, like let's say there, and you place your stop loss there, right? Then you would have got stopped out within like 5 minutes, before price ultimately bounced in your favor. So when times are volatile, pro tip, instead of setting a limit, set an alert. Once the alert hits, you go onto a lower time frame and observe whether or not the market is, shifting in your bias. In this case, we're looking for a short. So we're going to look price to, break structure and go to the downside. Once that confirms, then we enter. And if you want a video exactly on how to do that, I've already posted my bread and butter strategy that I use every single day in order to generate consistent profits on a low time frame chart.